following is a presentation of TFNN. It is now time for the Diagnostic Trading Hour with your host, Darrell Martin.
And I got Lou from Fairfield, Connecticut, man. How you doing, Lou?
I'm doing good, Darrell. And I got to tell you, you're not just blowing hot air out there. I think the way you look at the market is terrific. You're a nice guy as far as over the TV. All the research you do, all the homework you do, I truly appreciate it. I appreciate your view of the market. It's awesome.
I appreciate that. Thank you very much.
Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Darrell Martin.
All right, folks, going back here to the Diagnostic Trading Hour. We got the S&Ps up 22 points right now. Pulling up a little bit. Shorts having their stops probably right around 1963. And market sort of went up, hit that level. We called a short this morning. Went down to hit our first target. Didn't hit the second and third target, but we got that first target. Took profit, and should have at least put your other positions, of course, to break even. If you did, they're out. Stop loss, if you would have had it on there, we already took the profit, though, would have been up at 1963. It went up to about 1962.75. It's pulling on back right now. We had a long and a short we were looking at on gold earlier, and it went up to about 1996. Didn't quite break up to 1998 yet. But pulled on back down, and I was looking for a pull down maybe to 1196. And I was looking for a pull down to potentially 1185. So we got 20 minutes left, and you never know with gold. We'll see what happens. Looking on over at the Russell, we got the Russell up 11 points right now. NASDAQ up 48, and the Dow screaming on up 192 points. And props to Jay for a great short call out there on that as well. Checking out our middle markets, talked about gold already. Gold's down solid 2 deviations right now. We got silver is flying down about 1%. Copper is pretty flat. Copper's pretty flat on the day. Natural gas we currently have up over 1.5%. We got corn is flat. I mean, you're talking it's off a tick. We got soybeans down 1.5%. So some nice moves still in the ags between the two. Going on over to our FX and dollar pairs and all that stuff going on. We got the pound dollar down 170, getting nailed. Euro dollar down 154. This morning I called a pretty nice move on down, and we went down pretty much to the tick. Let me see if I can find that chart. And see, we hit our first target right there on the ES chart. But going on over here to the euro dollar chart, and was calling that move on down to 2,500. It literally went to 2,500 even. And just oscillated ever since then. Pretty much done. Put a fork in it. 3 deviation move. So very, very nice day. And worked out rather well. We got the pound, like I said, down huge, down 170 pips. We'll get on over at the dollar franc. Dollar franc is currently, where is the dollar franc? It is up 131. We got the USN up $1.33. Euro yen is currently up 7 pips on the day. We got the Aussie yen down 29. The Aussie dollar is down 129 pips. We'll get on over at the dollar index. It is currently up over 1%. A massive, massive move over on the dollar index. Let's take a look at that real quick. Go on down, pull that chart on up. But just a massive, massive move right there. And let's see what that's at on the deviation roll, because that is just an unheard of move. When I say unheard of, look at that. We have busted through a 3 deviation move, which is like a 0.3% probability of happening. And I'd say we probably grabbed a whole nother deviation on top of that, which is basically not in the realm of stats. So it just, I mean, it flew and flew and flew some more. And just some massive moves. It's finally leveling off a little bit right now. And we'll see where it ends up. But just some big, big moves right there over on the dollar index. All right, so that gets us caught up. We got the bonds, like I said, they're up a little bit today. Not as much as they have been previously, but they're definitely up. All right, so what else we got? Well, we had a lot going on this morning. Just a reminder, you got 3 hours and 4 minutes before all the markets on Nadex are closed. 3 hours and 4 minutes. Why am I bringing that up? I never talk about that. Why am I saying that right now? Because the virtual trading competition is coming to a close here in just 3 hours and 4 minutes. And we got some people that have been knocking it out. Like I said, 2 people I want to give definite credit to. Fady hopped on up there, and he's been up there for the last 3 days. We got Norwood, who all 4 days has maintained second place. And I'm really curious to see what he pulls off right here on the last day. Is he going to pull ahead? People have been one step ahead of him each day, but that doesn't that doesn't count for trades he's carrying over. Doesn't count for, any kind of potential Friday expirations. There could be some big Friday expiration trades coming out that make them out of nowhere. Remember, the balance shown is the equity balance, meaning all the risk is taken out. So anybody who has an open position, that's not accounted for. Okay, so it's how much money is in there, not accounting for any current margin and risk taken out. So if they have $40,000, but they have $5,000 of risk in positions, you're going to see 40. But if they closed it right then, they could have 5,000 more. Okay, so depending upon how all these positions close out today, we'll see who is the winner. And like I said, I'm looking very much forward to looking how it all wraps up. Let's see. Okay, well, I've got a few hours left, and definitely some recognition. And we got Mihan, Morgan, Wilson, Gable, and Arya Logan. So I hope I pronounced that correctly. Our daily winners, congratulations, getting $100 a pop right there. And let me see what else we can go into. All right. Well, we got some pretty big news this morning, and made everything just pop. I mean, it was just crazy. And I'm trying to go in over here. Let me pull up a couple of the charts on my other screen, and I'll bring them on over here. But the next thing is we really got to go in and get the trades for the news today, okay? And it was just a lot bigger move. So we had 2 moves that we went on, and obviously that Iron Condor, it definitely got hit if you put that trade on. But let me go in. We'll zoom in on it. Let's look at how that straddle did along with it, okay? And pull that up, and we're going to go into next week's news trades so that we have it ready to go. Okay, so we had this morning, yeah, we blew way out of the ranges. So you want to make sure if you got the pips on most of these, it worked out okay. But some of them, I mean, they just went and they never came back. So it was really an unheard of day. It's one of those black swan event type days with that. And so based on, obviously, the big moves, you wouldn't have taken the CAD trade balance or the US ISM like I mentioned yesterday. If we see some big moves on these, stay away from those 2 Iron Condors. Okay, let's go in and let's look at next week. We have a couple straddles coming up next week, along with a whole slew of Iron Condors. We got the Aussie cash rate coming on out. So on the Aussie dollar cash rate and rate statement there, we're looking at an 11.30 release. And usually, not a massive mover unless that's the Frank CPI. Hold on. I clicked on the wrong one. All right. Coming out at, what time? 11:30. All right. And so we'll be looking for a trade to go in for 11 to 7, getting a $35 profit. Usually it sort of pops and then lets it go and comes on back down. Looking for a $35 minimum profit. We also got the Frank CPI coming out, and along with their retail sales, that'll be released at 3:15. That's going to be at 11 to 7. $25 minimum profit on that trade. And we got the pound manufacturing PMI coming out at 4:30 with an 11 o'clock entry and a 7 a.m. expiration. Okay, and that is looking for a $35 minimum profit. And we do get those big moves, and they do happen, and we get them about once or twice a year. So, but you got to go for the game plan of, over the course of 12 trades. And let's look at the, 12 months. CAD building permits. They're going to come out at 8:30. That gives us an 8 to 10 a.m. Iron Condor release there. And we'll be looking for a $25 profit on that trade. Let's see. All right. I'll get on back to you. Sorry, I just keep getting operator questions, and there's nothing I can do. Okay, so we got a $25 iron condor trade. It comes in at 8, goes to 10 a.m. Let's see, and that will be on the CAD building permits coming out on the 7th. The CAD housing starts comes out at 8:15 from 8 a.m. to 10 a.m. And we're looking at a $20 profit on this trade right here. So that would be the simple trade, really the only major trade in the morning there beyond the weekly oil inventory report that we'll have on the 8th. Going into the evening on the 8th, we'll be looking at the Aussie dollar employment change and unemployment rate news coming out at 8:30. This is usually a pretty big mover. We'll be looking for a straddle on the trade, entering as early as 6 with a 9. You could look at an 11, but either 6 or 11 o'clock expiration, and $35 minimum risk. I have minimum profit on there, minimum risk, because it's a, let's see here, straddle strangle. Let me update that real quick. I just got to make a note. Got so many of these reports that if I don't keep up with them live, I don't keep up with them if I don't at least put a note. All right, there we go. Let's see here. Rolling on over to the 9th, we have, obviously, U.S. unemployment claims coming up. We got weekly natural gas inventories on the 9th. Also, don't forget again, weekly oil inventories on the 8th. We'll scroll on down to the Aussie dollar home loans report. So just a whole lot of Aussie news coming out. We're going to have 6 o'clock to an 11 o'clock for an 8:30 release. We're going to be looking for an iron condor on Nadex. We're going to be looking to buy the lower spread, sell the upper spread for a minimum profit of $30. And roll on in pound dollar. We'll be entering at 11 o'clock for the 4:30 release on Friday, 11 p.m. on Thursday, entry, 7 a.m. expiration on Friday, 4:30 release on Friday, and a $30 minimum profit on that iron condor, buying the lower, yep, and selling the upper spread. And then our last big news trade of the week for next week that'll be coming on up is going to be the CAD employment change and unemployment rate. This is, also that needs to be maximum risk. I don't know why I keep having that typo. And straddles, maximum risk. All right. All right, so a maximum risk of $35 on the trade. Again, we're going to be doing a straddle on the CAD employment change and unemployment rate, looking for a decent move on that. And so it looks pretty solid. And so just check that one out for a Friday release. So we got 2 straddles coming up next week. We had a couple this week. We had some nice moves off of it. We had that official bank rate. We've had just some really good trades lately. So now going into the new week, and we'll review some of those big trades. Just stay right there.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Thinkorswim, or Darrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing. Darrell takes your phone calls now, toll free at 1-877-927-6648. Internationally at 727-445-1044.
right, welcome on back to the Diagnostic Trading Hour. This is Darrell Martin with TFNN. And let's see where the markets are right now. We're going through some of the new trade reports, trying to walk you through those step by step. And we had the unemployment rate, the NFP report. Unemployment came in this morning. A little better than expected, ticked on down to 5.9%. And we had NFP at 248,000 on an expectation of 260. So that is great. That is an increase in hiring. So that's good news out there. I don't know how real it is, but it's good, and we'll see how long it lasts. All right. So that is the NFP report. We also had the services PMI that came on out last night. Let me go ahead and pull up a pound-dollar trade for it. We'll look at that. We had some pretty big moves on it, and you can see whatever the release there at 4:30. We were already moving. And right here about 2 o'clock, and then about 4:30, we got one more little jolt right there to the downside. Took us down to a one deviation move. It hesitated until this morning. Employment rate came on out. Dollar just kept getting stronger and stronger through everything. Ran on down to 2 deviations. Okay, sorry. Yeah. So 2 deviations on that pound dollar. We'll see. It looks like it doesn't have a lot more steam left in it. Let's take a look back over at the S&P. Let's see where it's sitting at right now. And see where it's going. All right. So right now it's right on up to 1958. It's pulling on back down. And down to 1960 after the run up to 1963. That's right where we saw the short stops at being triggered at. And like I said, right at that 1963. So once they're triggered, not a lot back up there. And going on over here, and I'm sorry, folks, I'm just completely thrown off today with technology issues. But going on back on down to the 1960 level, and let's see here. I expect it to break on back below one deviation. I would not be surprised for us to hit back to 1952 by the expiration of the day. We might even go back down to 1948. Being the end of the week, I mean, there's already been just a ton of short selling. I don't know if there's going to be enough orders, but there's definitely there has been a lot of orders here at the settlement area. And I'd probably give it a few point range, 1938 to 1940 right there. You can see that range where there was just a lot of orders. It was oscillating there on not Friday, but on Wednesday, part of the day. On Thursday, it was oscillating all around this. And so to see it come on back to that on Friday, that'd be a big move. But you see that in down markets. You see those big retracements in down markets where they pull on back down. And let's go ahead and check out where did gold end up for us. It just wrapped on up. We had gold move on down. It looks like it expired at, let me go ahead and zoom on in to the 130 range there. We got an expiration at 1192.9. So not too bad there. Just basically just stayed right around. Just really didn't hit our full upper targets. It did hit that 1196, which is awesome. We're going for an 1198. Didn't quite hit that 1198 right there at the deviation. And didn't even go quite back down. Who knows what we'll have through the end of the day, but as far as the Globex, not the Globex, but the pit hours, the Nadex hours, gold is done and cooked for the day, pretty much just a flat trade. All right, so unless you went long and took some profits, and Tommy was talking about that long this morning, he nailed it right on there, went right on up, and S&P went down, hit that first target perfectly, and like I said, I wouldn't be surprised to see it come back on and retrace at least to the 0.7 deviation level at this point, so that is a profit target you could be looking for going into 415. Okay. Let me pull up some other charts. We'll see what we got on the list here. All right. So for the Friday show, here we got, let me pull up some of these. I just have to, I don't know if I'm going to be going in and out on you here. I have to move my hands around to use the keyboard while I'm holding a phone. Okay. So the pound dollar, where is that? Okay, so that's a 10-minute trade from last night. We had a nice short 10-minute trade, and that came in the evening. So some nice evening trades, and I just like to highlight those MVP trades that come in, and they're working really well in the evening. And I'm working on a simple, just nighttime system where you go in, you basically get a trade one way or the other, based upon how it breaks. And you saw all these breaks we had happen. We got a break at 6 o'clock, another right when the market opens, we got another break at 8, another break there at 10, and it just, as you know, from the chart we looked at earlier, it just kept moving on down. And let's see here. Coming on over to this. We got to move on the euro yen. It's moving on up, and it ran up last night. We had a pending setup, pending long, pending short, and a confirmed long to buy right there, right about 8 o'clock, and got a nice run of about 40, 50 pips on the euro yen. Popping on into the dollar CAD, and there we go. On the dollar CAD, we had moves going on last night, 4 o'clock. Got another entry at 8 o'clock, and it kept running on up. So lots of dollar strength, lots of nice moves. Let's see here. Going on over to the DAX. Let me see if I can get this one to work for me. All right, that link is not opening up that chart. There we go. Now maybe it'll work there. Okay, so hop on into oil. Oil pretty choppy this morning, but overall it had a nice sharp downtrend. Moved on down to 1 deviation solid, and bouncing on that right there. We're going in and look at the DAX, on the DAX here, and I just can't get that chart to come up for nothing. All right, so we'll hop on over to the Russell. So choppy with a nice move. We got Russell. A little chop, but had a nice solid upswing in the morning. Did a pullback. Almost a settlement. Didn't quite do the full gap fill. Went for it, but then ran on back up and didn't have a run all the way back up to 1 deviation. Not really too choppy of a market. Solid profit poppers right there. That's a perfect profit popper. That's a perfect profit popper trade. So I love those profit poppers, and those are trades definitely to look out for. And especially when you get these lower volume, you get this high volume, it drops off, you get the lower volume happening, like a little below expectations. That really is profit popper territory. So let's see here. Let me pull this DAX back up. I think I can get it now. All right, so on the DAX, there we go. Had a great elite move, running on down, dropping, and from settlement, came on down to 0.7, came on down to 0.1, kept going 1.5, kept going on down to 2. And just a beautiful move. Then it turned around, started heading back on up this morning. But it's a great day yesterday on the DAX. Looking at the gold futures here, we're at right now. A lot of chop going on in gold, but like as far as later in the afternoon. But still, like I said, we called some good trades. We had some good shorts. We had them from down to 1 to 1.5 to 2, and just bouncing right around on that 2 deviation level. Nasdaq opened strong this morning, but turned into choppiness a little bit later after it moved up and hit the 1 deviation level. Get a solid another profit popper right there, as you can see, and then moved right to the deviation, paused off. We got another profit popper came up, might have actually hit the take profit because it actually can hit right before it hits the high of the A. We got the S&P. We've been talking about the uptrend all morning long. It was running up, and we'll see if it pulls down going into the close. Just to currently look at it right now, it is pulling on back down into that 1 deviation right now, as predicted. All right, so let's dive on into the dollar CAD. Dollar CAD's currently near multi-year highs, and so it was one of the, I was just looking at this report, talking about the multi-year highs on it. Let's get rid of the advertisements. Just a strong U.S. jobs reports, and then just getting a lot of additional strength. The dollar just fit, with all the international countries trying to do the exports, and all that stuff, all these different things happening. Some good stuff out. Euro dollar just tumbling, and a lot of people are predicting it to continue to tumble. And here's one of many charts out there, but just showing an ongoing drop, and had a little bounce, a little recovery, and then just got cremated today again. Aussie dollar dropped right through that double bottom, lowest it's been since 2010. So just some really major drops, and we dropped it, it pushed on through it. If it may come back up and try to retest that, but a drop on down would not be unheard of. If it drops on down here, we could get a just continued massive decline. Aussie dollar getting completely crushed. Looking on over at the dollar index, it has been amazing. It has been all about the dollar. 1, 2, 3, 4, 5 deviations. And King Dollar is king, it's czar, it's emperor, it is reigning supreme currently. All right, we'll go on. Let's check out. CNBC has a nice little thing right here about the dollar going 12 straight weeks of higher and higher gains. They're even taking on King Dollar ruling right there. It's starting to take on the headlines. Be careful when that happens. But anyway, so, you got the dollar. Then you got all these different rallies. But it's just been rally after rally after rally. Just a reminder, you got 2 hours and 20 minutes. 2 hours and 20 minutes. Well, maybe 2 hours and what? Let's do that. 2:30, 3:30, 4, a little bit more. So a little over 2 hours left on the trading competition. All right, so we talked about there's one holiday I need to bring up for you. We'll go into that. Hold on one second. And get over here. Okay, so on Sunday, the important thing you need to have, we got a bank holiday happening in China and a bank holiday happening in Australia. So make sure you have those on your Be Aware reports. That definitely should lighten up that Aussie volatility. Now, it also may increase volatility due to lighter liquidity. So it can go either way on that, okay? And then, let's see here. Let's look at the other Be Aware events. I went through each one of the news trades for you. We're going to have that IVPMI come out on the CAD. Be aware of that one. China continue to have a holiday on Monday. We already talked about the interest rates, the cash rate, and the RBA rate statement coming out on the Aussie on Monday. Rolling on into Tuesday. Let's see. Bank of Japan's going to have a press conference. If you don't know when that is, it's real simple. Just click on here, go in, and it'll say to be announced. Well, to be announced doesn't have to be completely a mystery. When has it released in the past? 2:30, 2:30, 2:31, 2:30, 2:32. Okay, I think we might see a pattern here. So expect this to come out right around 2:30 should when we expect that conference to, the Yen Bank of Japan press conference to be released. Okay, and let's go on over here. Manufacturing production coming out 4:30 on the pound. Make sure it's on your list. We got building permits on the CAD 8:30, and HSBC Services PMI. That release that we're looking for right there will have an impact on the Aussie and on the yen. And the China 50 is in demo right now, and so that might be something you might want to start looking at as well if you want to start playing with that. Over on Thursday, we're going to have the pound official bank rate. That's going to be a big straddle. I think I may have had that mixed up on my plan there, so I'll get that fixed for you. That's going to be a big news trade. Let me open it up here and read that one off to you. But usually it's a pretty good report, especially when we don't have the euro in the way. That's one of the things that can be challenging on the pound straddle is whenever the euro is basically blocking it, you could say that pound interest rate, it can't move, right? So it has like a very small move when the pound's there. Anyways, that rate statement's going to come out at, what do we got, 7 a.m. And so I really would not expect a straddle at 7. I'll go back, I'll look at that report. We're going to rewrite that one. And I just want to make sure I want to look over the last 12 months and get that one corrected. But definitely need to update that report. Let's see here, because it can't expire at 7 and come out at 7 unless we're doing a iron condor on it. Let's see. All right. Let's see. Try to pull that one up. Hard to do this with just a couple hands. All right. And I'm just off right now. But we got our unemployment claims, of course, will be coming on out, and you can do spike trackers on that. We're going to have monetary policy meeting minutes coming out, not necessarily something you trade, but something you definitely want to be aware of next week, Thursday, October 9th. And then going into the 10th, we'll have, let's see here, out of all the reports, we already talked about the big CAD straddle we're going to be doing. Do some FOMC, remember some IMF meetings starting up next Friday, probably Friday, Saturday on those. Yep. And going on in, and then we're going to have a holiday. So what holiday, you may ask? Well, there you go. You got Columbus Day. So
So that's going to be happening here October 13th, so a week from Monday. The U.S. and Canada will be having Thanksgiving Day. So Thanksgiving is right around the corner. That catches us on up there. For local news, so there's a little bit more on the humorous side, but not humorous. But the Ebola virus seems to be everywhere in the country on news. That Dallas has one person that flew back from Africa after helping some people over there. One person. More people die from deer than die from Ebola. But it's funny. I mean, they're like, should you keep your kids out of school? And no, just have them go to school. They're okay. It's safe. And I understand the caution and the need, but it's just interesting watching the news and seeing how little they have to talk about. And I'm like, man, there is a lot to talk about. It's all the dollar moves and the currency moves and, the market's getting cremated and then flying back up and flying back forth day after day. But apparently they have nothing more than to raise some fear. But anyway, it's safe. We're loving it, and we're not worried about it. But it is interesting watching the news and what they put out there. So let's see, what else do we have that we have on the list? Because I sort of, like I said, got a little bit off on my normal trading plan. We got the S&P. Let's see, is it still moving on down? Yep, it's coming on back down. So right there. Now it's holding. Currently what was resistance has become support at the moment at 1058. If it can break through that, then hopefully we'll be able to go on back down and break that 1052. I hope you did take your profit earlier. We talked about having at least a partial take profit on that position. I know Jay said he took his, and we took our first one. Right here when it came back down to 1953, that was the first take profit, then up to 1949, and then down to 1939, 1940. And I basically put on some low, high profit binaries. We'll see if those turn out. So we're going to have to get a lot of increased volume, or is everybody just exhausted and that they went home for the day after these massive, massive moves? This has been some of the best market trading in a long time with all this volatility. Some traders, they get really nervous about the volatility, and rightfully so, because they've probably been burned, a few times over. And, that's why I am such a big fan of trading on Nadex, because I have capped risk. Even a really bad day, I can't move my stop. Okay, now I can move my stop if I want to cap my risk even more. But there is a limit where it can't get any worse. The only thing, I could add in more trades, more contracts, but I can't move it, and just let it destroy me. I know, if this just blows up my face, this is the worst thing that's going to happen. That is a massive stress reliever. I think it makes you a much more effective trader because you don't get that paralysis, fear, deer in the headlights thing going on where you're like, oh my God, oh, wow, it's against me. I'm this far down. I don't know. Maybe I should just let it go some more at this point. All the games that you play in your head, you don't have to play those games anymore. And to me, that is absolutely massive. So to go in and go, I'm going to short this, and I'm going to have one with the ceiling at 1960. If it goes up, I'm down that amount. I just sit back, I wait, I hope it goes in my direction. But if it doesn't, this is the worst thing that could happen. It's almost like you've accepted your stop loss before you got in the trade. And you've said, there's no way I'm changing this whatsoever. But it's more than just accepting a worst-case stop loss. It's knowing that even if it hits my stop loss, I don't have to be out of the trade. So I'm not near as stressed by my stop loss because my stop loss doesn't mean, hey, you lost, you're out. Now you have to decide to put more money at risk if you want to get back in and try to, make more money, make it back, et cetera, which, of course, you don't want to play that game anyway. But you don't have to play the revenge game just because a price level was hit. And so there's a massive psychological impact for you to be able to go, you know what, my risk is here. I can't increase my risk unless I added more contracts. There's no reason to do that. This is my risk. This is what it is. I'm not going to increase my risk by going and moving my stop further up. I don't have to worry about anybody hitting my stop because they can't hit my stop. It is impossible to hit my stop. And a lot of people go, how is that possible? That just sounds too good to be true. I don't know how anybody could do that. It's just an option. You do it all the time if you trade options. You buy calls. You buy puts. If you buy a 1960 put, the cost is a couple dollars on that put or whatever it is, that's your cost. And the Nadex spreads are actually priced very on par with the S&P E-mini futures, just to give you, so you know, I mean, when I say it's just like a put, I mean, or just like a call, it's just like a put or just like a call. Let me show you an actual example right now so you can see this, so you know how on par these things are. I don't know if that's really, you know, going to be acceptable or this or that or, you know, whatever. And you just go on down. We'll scroll on down here. We got 1960 right there. Okay, that's $2.85. All right, you know, hold on. We'll be right back, and I'll show you the example right after this break.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
All right, let's go on back here to the Diagnostic Trading Hour. And so what I want to do is I want to compare just like an S&P 500 spread with you against an S&P high at 500 put. And so let me see what I can find that expires at the same time, hopefully. We got 1960, we got 65. Perfect, okay. So now let me do a tear-off ticket on that. I can bring that on up here. And so we do 5 of them, all right? So right here, we'll put these side by side. And sometimes they're a little more, sometimes they're a little less. So I've seen Nadex be a little more. I've seen Nadex be a little less. So it can vary a little bit. So over here, if we bought the 1965 put. Sometimes I've seen them be a lot different. But a 1965 put, that's by selling this, we're basically selling a 1965 put. Why? Or we're buying a 1965 put by selling the spread because we can't lose any money above 1965. Let's go over here. What is it right now? It's priced at 5.50. Okay, and so we go in and just multiply that times 50. $275. And if we update price, it's going to vary back and forth. Now it's $6. So really, and here's what I figured out. There's a very simple formula, but it's 1965 plus 6. Or minus 6. 1965 minus 6. 1959. See, now they're actually priced right on par because it's 1959 versus 1959. Nadex prices the spread as the cost of the call or put, you could say, plus or minus the strike. Okay? So if I'm looking at a put on CME, I'm looking at just the cost, the $6. Okay? So I'll pay $6 times 50 because there's 50 options in one contract on an S&P E-mini future. I know it's a little different than your stock options that are 100 options in one contract. But if my cost is $6, okay, and I go over here, 6 times 50 can be a $300 risk. See, 1959, $300 risk. They are literally the exact same price, okay? And that's by 500. So 300 right there. And so you can subtract it. Actually, Nadex has a tighter bid-offer spread. So people want to go and complain about spreads. It's $1 wide, okay, on one of them. So basically it's like you get 200 if you went the other direction, basically. Or Nadex is 1959.4. It's only 40 cents wide. So it is more narrow than what you're showing actually on CME right now. So they got a tighter bid-offer spread at the exact same risk. You go, well, what's the difference? Well, Nadex does cap out at 1935. So, yes, if the S&P were to drop an entire 35 points in the next 2 hours and 17 minutes, I would love it if that would happen. But if that were to happen, okay, then you would be capped out. But you could also go in and add on another contract because new contracts come out every single hour. So it's not like you have to stop. Or you could hedge a position. There's a lot of different ways that you can use it. But the bottom line, the most important thing I want you to see right now is how they are very, very similarly priced. And with that knowledge, that does equip you to go, okay, there is a Black-Scholes model here. And I could use these just like I use them, but why wouldn't I just use CME? Okay, well, you have multiple reasons. But one of them is that CME option you're looking at, you don't have a daily. You don't have a daily every day. You have a daily on Fridays. Okay? They do have some other ones. They have like last day of month and stuff like that. But you don't have a daily every single day. And so that's a big advantage. And you can do one versus having to do 5 to 50, like on these needs. These are the small size where you do a larger size. Remember, the fees cap $9. To 100 contract, $9 on Nadex. Well, like the little advantages, but that's tough for you. You have a great day. I'll see you Monday on the Diagnostic Trading Hour.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
You're watching Tiger TV.